Hey guys, Bob Trade Genius, the 16th of September. I'm going to walk through my I'm going to walk through my ETF sectors watch list and tell you what I look for opportunities and how I read these charts. And then you could drill down into these specific ETFs to look for opportunities or to filter for additional trades if you don't want to just trade the ETFs. And so I'll also just show you which ones I like to watch. So this is BOTS, POTZ, I mean bots. It's the robot one. First of all, I like to look at the 4 hour. This is a 65 period moving average. This is the standard deviation 1, 2, and 3, looking back 100 4 hour periods. This is the dynamic linear regression, also looking back 100 periods, and it's also a just two standard deviation look. So it's two different calculations that they have inside a trading view, and it just gives you a kind of a good sense as to the oscillations in the trade. Market likes to move around the mean, and so it's always good to look for opportunities when it gets stretched. The other thing I like to look at here, this number here, it's called a Pearson's number. It's basically telling you the angle of the fixed linear regression, and anywhere zero point 0.3 or 0.35 and under I consider neutral. 3.5 to 5.0 is a slight trend. 5.0 to 7.5 is a strong trend. Above 7.5 you're starting to get to I hate to use the word parabolic, but it's getting to a point where it's a hard trend. It's difficult to counter trend that trade, okay, unless you get a really, really, really big move like a flush or an overshoot. So, and then the other things are our trade signals, the moneymaker, and I'll explain to those as they become germane to the conversation. So here it's slight trend down. At the moment, it's overbought, and so I'd be looking for this thing to start to do a pullback, and then this trend changes every 4 hours based on the look back. But at this point now, there's really no opportunity to take that trade. And I'm going to skip all the Bitcoin ones here, and then here's corn. And see, corn here is 0.94. This has been in a hard trend down. And then one thing that I like to look at to see if a trend's possibly going to change is that you got this confluence of buy signals here that are looking at different extreme levels. And in addition to that, it's starting to break over the moving average. And then if this thing trend changes up, I'm looking for the next opportunity for you. See this pale blue here? This is basically it's an RSI reading that if it gets into the 45 to 50 range and cooks back higher, then that's an opportunity for me then to maybe start buying the dip on this. But right now it's still a watch. Now there's no reason why you can't take some of these trades, but they're not in your favor. So there's so many things out there to trade. Just look for the ones that are setting up in your benefit. Okay, we have DBA, which is another food one, but more diversified. And you can see this thing's starting to change trend. It's above the moving average. We have a trend change on the moving average. It's above it. And now here's the thing: is it pushed up to 3 standard deviations, likely to pull back and provide an opportunity to then potentially buy the dip if you get some light blues here. And on a moneymaker, just for those who have it, I give this out quite a bit to subscribers, but you can take a quick look here again. You can pause this if you need to, but I have 2 of them set up, and those are the settings. And then I also I'm working on something I'm beta testing here, so I'm not going to talk about it until we get it to the way we like it, but it's pretty cool. And it's going to give some other additional trading opportunities. Okay, it's also really good at finding sell points. Next one here is emerging markets. And this one here is also starting to get a little overbought. I think you're going to see a lot of charts that are going to look just like this. Everything's getting to be very binary. There's like nothing really that's trending the wrong way to everybody else except for gold, silver, and the miners, which seem to be been running opposite for quite some time now. But again, if you're in emerging markets, you may want to start considering reducing your position, or start thinking about maybe even getting into a short opportunity. So that 2 standard deviations, 90% chance it's going to either consolidate or come back down to the to the center line. Again, the banks look the same way. Starting to get a lot of overbought situations here. And whenever I get a double like this, it catches my attention when it's sitting at 2 standard deviations, or especially if it gets to 3. This is the euro. I look at it primarily for this chart to just see, really this is kind of the commodity risk on, risk off. And you can see the dollar against the euro has just been very, very strong. And they're just having a hard time maintaining the value of the euro by design, I would say, which is that's what causes Trump to get all apoplectic, I guess that's the right way of saying it. But every time this thing tries to push up to this moving average, it just gets knocked back. And so they just don't want their currency to be strong, which is going to kill their exports, because Europe is nothing but a big mercantilist entity. The yen is interesting here because I use it as risk on, risk off, and we're forming another risk off scenario. And that's what I was talking about when you're looking at the SPY here, is that they use the yen to sell it to come up with cash to be able to speculate. And here's August. This is when the yen started to strengthen. When the yen's weaker, they sell it, get cash, speculate. When the yen strengthens, they got to sell their equities to pay back their bet so they can close this position, because this is brutal, especially at the leverage that when you trade currencies. Now I'm going to show you this. So look at August here, and this is where the yen started to rise, okay? And then here's SPY, just to give you a perspective. Make sure I got SPY here. So you got August right here, and this is the big sell-off. See? So those are things you like to look at. Now we're here again, and I know I skipped ahead, but SPY is struggling here at the 2 standard deviations. I got a double sell indicator again. So the logic would tell you that it should trade down and intercept this moving average here, and or at the most bullish it will probably kind of consolidate. But we have a big news week this week, so who the heck knows what it's going to do really. And that's with everything, so you just have to be careful. But if you're just looking at the charts would suggest to me that that we have some consolidation in front of us. So I'm expecting a little bit more weakness here, so we'll see what happens. And next one is, where am I at here? Oh, I jumped way ahead. Sorry about that. So let me now go to GDX. Okay, so GDX and GDXJ look alike. We bought GDXJ on Friday. We're watching this thing push down, and it's trending up. This is ideal, okay? And it's it got down past 2 standard deviations, and it tagged it at the end of the day Friday. So there's an opportunity here to take a trade. Now, right now, the only downside is that you know it just really busted out. So below the moving average. So it may just trade up to here and then come back down. But again, this is a good area of risk reward for you to take the trade. GDXJ looks pretty much identical. Here's GLD. Okay, GLD is the same. Broke the 2 standard deviation, gapped up. So I'm not the only one with this great idea. And so this is what you look for. And then ideally now with gold is that you want this thing to jump back up over the moving average and start moving higher again. And then here's IWM. And this thing was just chop, 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 chop. It kept hitting the moving average or the center line, breaking down, moving up, hitting it, breaking down, moving up, hitting it, breaking down, moving up, breaking down. All of a sudden then moved up, gapped up, and gone. So that's why you could take these trades, and especially if you're trading these indexes at throw a couple options on there. It's a good trade, even though it's counter trend. And then it just broke up, and now we're at a point now where this squeeze might be over. I'm getting multiple sell signals on it at 3 standard deviations. There's a good chance that IWM has made its move, and then you can look for your opportunity to get short. If you're a swing trader, you may want to look for a swing high when, for it to close below this bar right now. And so, so this looks an opportunity to get short on it pretty soon. So where am I at here? Okay, here's lithium. Like I said, a lot of these are going to look the same, so I'm not going to just keep repeating myself. Marijuana stocks are in trouble, 0.92. These are opportunities now to start shorting this thing and make some money. Okay, boom, short, boom, short. You got a close signal here. That's how you use that too. If you're shorting this or writing puts, you get this buy signal here. Hey, it's not going to hurt you to close it because you just don't know if it's going to try to start trend changing for you. But this thing here is whenever you get these failures at these moving averages like this, and you and these linear regression lines, this is a good opportunity for you to make some money on the short side, and you just do it with puts. Okay, here's the Qs, and this thing is just the same way. Looks just like SPY. Like I said, everything's aligned now, so that's the scary thing in and of itself. Where are people going to hide, or just going to eject out the cash, or they'll probably jump into gold and bonds. But they scared people a little bit by selling the bonds off last week too. So people should be nervous. Just be honest with you. You shouldn't be. If you're an investor, not a trader, you should be pulling some chips off the table. You had one heck of a run. It's not going to hurt you to miss 5% move higher if you're wrong, but it'll sure hurt you a lot if it moves down 5% at the least, because you have to make 10% to get it back, or God forbid it goes down 35 or 40%, then you're pretty much screwed. And then let's see where we are here. So we have SILJ. Okay, this is the miners for silver, and this is the juniors. Still making lower lows, but in a 2 standard deviation move. You take your shot here, you set your stop. If you're wrong, you just go for the next setup. This is a game of probabilities. This system that we've been doing, and I've been trading it based on this since July 1st of last year, and we're averaging about 65% win rate. And then the win percentage is pretty high because we're only in a percentage. The gains annualized are pretty good. They're about 10% because we're basically in these trades for about a week. So so it's a good system. You just have to just kind of know you're going to lose on 1 out of every 3 trades. But you set reasonable stops, and that 10% gain is average of wins and losses. And then you then take your trades that are winning and just move your stops up until you get taken out, or you get a sell signal, or it breaks up through like up here, 2 standard deviation move. Hey, you close the trade. Look for the next one. Here's silver. Okay, silver recaptured its moving average here. It's above the 2 standard deviation. Looks like a potential opportunity here. We'll see what happens. Wednesday is going to tell us the story. Okay, semiconductor index. It's already weakening here a little bit, but if you get a buy signal on this thing or it comes down to moving average, it could still move higher. But it's kind of no man's land for me right now. SVXY, this is the volatility index inverse. And this one here is that if you like to trade this trade, now it's too late now because it's overbought. But when it pushes down here, if you get any move to the 2 standard deviation line, regardless if you see any other buy signal, just take the trade. And in fact, this is one of the few ones that I scout out on the hourly. And you could just be in this. And if you have a small account, and you get these buy signals, take them. And you can stay in them usually for enough that you're not getting hit on the day trading rule. And so, you're looking, if you especially have the day, if you have the money maker, you want to set the tighter parameters on the money maker, which is the one here that's showing at the the 50-40 and the 40-50, is because this one likes to trend. And so once it trends, you just buy the blue dots, you set your stop, you get a sell signal, you sell it. Comes down, you buy the blue dots, you get a sell signal, you sell it. Now in this case here, you lost money. I don't want to confuse you, but this dot here was on a closed bar here. It really opened here. So sometimes you're going to lose. Like I said, that's just the nature of the beast. Here you got one at 3 standard deviations, buy it all day long. Okay? And it's up to you. Now one of the things that I like to do in the hourly here, and I talked about this before, is that if you have the 65 moving average running, and you get a buy signal on these linear regressions like this, just let the moving average be your friend. Now, if you're nervous about, oh, what if they gap this thing down or they get crushed or whatever, just take profit along the way, or better yet, buy call options on it. Then who cares if they blow it up and you lose it all? Is that call options, you limit your risk, okay? So instead of buying 1,000 shares and you have 51,000 at risk, you can buy 10 contracts, and have potentially 10,000 at risk. I think you get my point. So those are different ways you can trade it, or you trade out of it. Hey, every time it crosses up over a standard deviation line, I'm taking a quarter of it off, and you get out that way too. But if you get taken out, just wait for the next buy signal and run it. And look at this thing here. You would have had 4 or 5 buy signals. Now it's setting up again another buy signal. So chances are this market's going to rise again this week. So just keep an eye on this. You can watch it to see how this works. And it doesn't always. It does. Excuse me. I get hoarse at the end of the day. So sometimes you get this situation where you get a hit and you get a double bottom. But if you took this trade and you get taken out, or you just wait for it to hit 2 standard deviations, just jump back in. Especially if you get multiple buy signals close by. That means that the first one was a little bit of a head fake. But overall, this is a good trade to take. Now, when we start selling off, you don't want to be anywhere near this, but this will be trending down anyway, and then you'll just know to stay away. Here's TNX, is the bonds. Okay, this was that little sell-off they had here, and now, a sell-off. This was the ramp job they did, sell-off in the bonds. They did to force everybody into the small caps. And now it's starting to weaken a little bit here too. So just keep an eye on this. It all depends on what happens Wednesday, what it does. Okay, here's UNG. Now UNG is a nice trade. It's parabolic right now. Natural gas has been running hard here since the end of August. But it's getting to a point now where if we get a push move higher here, where you get a lower high off of a low, then it's probably a good opportunity for us to take this thing short, because it runs the same way like VXX does. This is one of the 3, like DBA and VXX, that its preference is to go down because of the way the contracts roll. But when you get a big front end move, what we have right now, it forces everybody to buy the current, and that's what's happening here. This is a squeeze happening, but as soon as it abates, you're gonna have a great opportunity to buy puts on UNG for a trade or for a nice run. So in this situation here, the same way I was talking about SVXY, when you do get a trend like this and you get this high move, just look for opportunities to get in and use your moving average as a stop. And here's URA. Okay, they ran really well too. Again, same thing. So it gives you an opportunity to take this trade and just run with it. USO, we know that story. I think this is, unless we go to war, I think this is going to be the top. There's a lot of oil out there. Don't listen to all these people. So, and I doubt the Saudis and the Iranians are going to go toe to toe, because they both will go broke, and both of them have bigger fish to fry than to satisfy their egos, because they'll both be toppled. And then the last ones I want to show you here is, here's the VIX. Okay, this is where you start getting a little nervous here. Slight trend change might be occurring. This gap up like this, but we've seen those before, but it's pretty low right now. So just keep an eye on the VIX here. It's warning you that to be careful. And then here's VXX. Okay, I rode this trade all the way down. I got out on Friday, so I even talked about this. I mean Thursday. I even said that, hey, on this buy signal here, I got out. But here it was flashing another sell. I said I'm not going to get into this going into Fed week. And what's amazing to me though, even with the news of this Middle East conflict, is you'd have thought the VIX would have just spiked this thing way up, but it didn't care. They only care about what's the Fed's going to do. That's the only game in town. Let's see if there's anything else. Here's wheat. Okay, we're in wheat, and we've been running with wheat, and we're in it. Our average price is 503, and we're still running it. And I haven't changed my stop yet. My target is up about 560 right now, and it's much of a seasonal play as it is a chart play. But again, I can now use my moving average here as my friend. And if I get a close below that, then I may think about it and see here one day that played the game and hammered up. So just keep an eye on this. If you're in the trade, you could probably set your stop back up to about 510. I wouldn't go 515 because it does these crazy things. It's a stop hunter, and I hate it. I get stopped out a lot on these stop runs. And that's the nature of the beast. When there's not a lot of volume here, they could play games with you. But this trade's working out really nicely, and I think this is going to be a good trade, even going into next year on and off. Okay, so here's also biotech. Okay, biotech's just been grinding higher. I stay away from biotech a lot. This might be a good play, but I haven't really been focusing on it all for a while because it's a lot of news kind of risk in it, but you get a spike down on a trend up. This would have been a good trade for you. I just haven't been following it. Here's XLE. I actually have a call calendar on this right now. This is my second week with it. The first week was profitable. The second week will be profitable on it unless it closes below 60. Then I'll be able to roll it into the following week. My call is for October 18th. At 61, and I've been selling the 61s against it. I think this is going to come back down and test this moving average, and then I'm just going to keep rolling it for cash. And it's also my hedge a little bit against my my short position I have in oil for October as well. Okay, here's the XLF financial, and it's been parabolic, but it's also starting to show some signs of potential gap down there, potential weakness coming. So watch to see if this thing fails and we get a sell signal at a lower high, then this is probably a good opportunity to buy puts on XLF. Here's XME. You notice they pushed it up when they sold the bonds off, kind of flatlined again. I was watching FCX. It's just been disappointing me, so I stayed away from the trade, but it had a really good run on it. I just was focused on the miners. They were running, and I was focused on energy, and they were running too, and I went with them instead. And then that's pretty much it. So I hope that wasn't too boring for you guys, but that's what I do, and then I go over and I have telecharts, and I'll plug that sector in, and I'll look at the different stocks in there for opportunities, and I have all those same filters built into there. But the advantage of telecharts over this is actually I could screen. Here I got to do this method that I just walked you through, and you got to do it visually. So it probably take you about 20 minutes to blast through. I can blast through really fast because I look at these all the time, and I know what I want. But for you, then pick your favorites. You don't have to boil the ocean. I pick my favorites. I know where I'm focused. And so, but you need to look. And I need to look more too, because things are going to start changing here going into the earnings season and going into this Fed potential easing cycle. Again, thanks for listening, and I hope this was helpful. Let me know in the comments. I appreciate it. subscribe, click the bell, do all that good stuff. Help us generate a few dollars here in the out of Google's pocket. Always appreciate it. Have a great day. Bye bye.